Hi there, YouTube. How you guys doing? Hope you guys are well. It's Easy Fix FX here, back again. And today I just want to take you over a very powerful strategy. It's called RSI Divergence. You may have heard about it before or seen videos on it on YouTube, but you may not have taken it seriously. So I've been using the strategy now for quite a while, and it's been an absolute game changer for my trading. But I just want to show you guys how to use it effectively because it offers a very, very high risk to reward. And it's an absolute game changer for your risk to reward and for making profits. So basically, primarily, obviously, we want to focus on price action. So if we have a naked chart, it's pretty difficult to know when the market is going to reverse. So we need, besides looking at price action, we need some sort of indication of when price is gonna reverse, because obviously we're trying to catch tops and bottoms as best we can for the best risk to reward. So first of all, we're looking for price to be overextended. So if we're just looking at this now, we can see for a couple of days price came all the way from up here down to here. All right, now this is NFP. I wouldn't have advised trading here, but during this time. But let's just look at this as an example. Just come in here to indicators and type in divergence. So it's the first one here at the top. Don't look at any of these other ones. They're all modified and they're all just weird and they don't work quite nicely. This is the basic one, and to me it works the best. So this is the indicator over here, RSI Divergence. So how it works is basically divergence is when the price is doing one thing. So the price over here is making lower lows, but the indicator itself is doing the opposite. You can see the indicator is making higher lows or higher highs. So we're looking for divergence to happen. So we're looking for a market to be overextended. And then we're looking for divergence on the RSI divergence indicator. So we can see that happening here, and we can see how the market just shot up. So this is what divergence is telling us is when price is exhausted. And it's telling us just about when a reversal is about to happen. So I took this setup last week. As you can see here, I'll just show you. Price made a high over here. The RSI made a high. You can see over here that the price made another high over here. But the RSI itself is making a lower high. And then we got this bearish engulfing candle. After that point, we got bearish divergence pop up over here on this indicator. Okay, so I took this setup. I set a limit order over here. I got filled just on that wick of that next bullish candle, and I wrote it down just to about here. I was just targeting these lows. See these lows over here? Just targeting that. So I made about 40 pips. As you can see, 39 pips. This is a ruler showing us here how many pips we've made. We can measure our pips. So I made about 40 pips. I did take another setup. Where did I take that one? I think it was this one here. I took this setup. It was not a drastic setup, but so I saw here the price was making lower lows, but our RSI was making it was diverging. This is the divergence indicator. So the indicator is doing the opposite of what the price action is doing. Okay, so I saw this and I got in just at the high of this pin bar. So we're looking for rejection candles. We can also see this is an area of support over here. We look left, we can see that's an area of support. Okay, so I got in just at the high of this candle over here. I set a buy stop. I was just targeting this area over here. I made about 30 pips on that trade. I didn't take this trade because I saw, obviously it's NFP. So currently, if the markets are live at the moment, we can see here that we've got this overextension of price. But we can see that the RSI is showing an exhaustion. We're getting divergence on the RSI. Plus, we can see here this big gap over here needs to be filled. This is imbalanced price action. RPA, imbalanced price action. So this bank needs to get out of their orders. So this price is probably easily going to drop and fill at least half of this candle. So I'd be targeting about halfway of this candle right over here. But we're waiting here I'm keen to take this trade. I'm just waiting here for some better bearish price action. So I'm waiting for a pin bar or bearish engulfing candle. Price might make another higher high, but we'll just wait for this indicator to print a lower low, RSI to print a lower low or lower high, sorry, and then we'll enter the trade, but coupled with bearish price action. You can see here, let me just give you a bullish example. So price made a low over here. RSI made a low down there on the RSI indicator. Price made another lower low, but our RSI indicator printed a higher high. A higher low, sorry. And this is a beautiful setup here because we got two pin bars. So this is basically a tweezer bottom. We got two equal candles over here. They're both equal pin bars. So this is actually a beautiful setup. Plus we got our imbalanced price action over here. We can see the market makers or banks, whoever you want to call them, push the price up. Okay, then we get this. Obviously, they've got to get out of their order because all of this is a lot of buying over here. So they want to fill all their orders coming back down. So they brought the market down and they filled this whole candle. You can see they filled majority of this candle right over here. So they filled all their orders. This gap. Okay, so this is actually a perfect setup right over here. Plus we got bullish divergence. Okay, so this is just an overextension. Even this one here, this is quite an overextension over here. This is quite a big move. We can see here we got bearish divergence. So the price has made a high over here, made another higher high. But our RSI is telling us price is exhausted. It's making a lower high. Okay, and then we can see this market dropped. That happens literally at least 2 or 3 times a week. That's very, very powerful. Here's another one. The price is overextended. You can see from here to here, price is pretty overextended to the downside. Price printed a lower high, lower low, sorry. And then the RSI, obviously, then we printed price action showed us another lower low. And our RSI showed us a higher low. So it's diverging. The indicator's doing opposite of what the price action is doing. Then what are we looking? So first of all, we're looking for our overextension. Then we're looking for our divergence. And then thirdly, we're looking at price action. So we're looking for wicks, like pin bars, bullish engulfing candles. We're looking at rejection of this level. If we look to the left, we zoom out, we can also see we had a level of support. We can see this level acted as support. We can also see here we had a round number. We had 1.6500. So we're rejecting 1.6500. Okay, so that's four confirmations. Right, so you can just combine the strategy with levels of support and resistance, or look for price to break a level. So obviously this was a stop hunt. So they were, all these people that were short over here, the market makers pushed the price up, stopped out everyone who was, because they don't let anyone get away with anything. Remember, the market makers always put the price in a range, literally, and they just take out everybody, because everybody, beginner traders, are always trying to catch the big move, but there are no. It's very difficult to catch the main trend, to get on board of the main daily trend. That's why I day trade, because most of the time price is in a range, and they don't let anyone escape. There's market makers and banks don't let anyone escape. That's why I day trade. It's very rare that you'll get onto a move and it goes for days in your direction. It's very rare. Rather just take a few day trades. And basically also, so this is a very good strategy you can use. And if you combine it with, just want to take you, I think YouTube removed my video on compounding for some reason. So I just want to quickly show you how compounding works. So if you just aim for 10% on your account per week, just 10%, you put in $100. You do 10% over 2 years. You just wait. You have discipline and patience. You just stick to 10% a week. Click on calculate. From $100, you've made over $2 million. Okay, so you can use this strategy. Okay, get good risk to rewards and just aim for 10% in your account. Once you've hit your 10% for the week, then you just finish. You finish for the week. You don't need to put yourself under pressure. Remember, like when I first started trading, I thought you need to be in the markets all the time, catching pips, and I thought that traders are constantly catching these big moves and all that, but you don't really need to. You just need to catch 1 or 2 decent moves a week and compound your account, and just have patience and discipline and wait out. Use time as a tool. Use time to your advantage. Look at that. So month 1, we've taken 100. We've made $50. Okay, because we've been doing 10% a week. So we've turned our account into $151. Month 2, we've made $77 based on that 10% a week. So we've taken our account to $228. Month 3, we've made $117 based on doing 10% a week. We've taken it to $346. Okay, so the first year, if you look at the first 12 months, is pretty slow. But you've got to be patient and disciplined, because look at, by month 12, we've made $15,000 basically. That's actually a shitload of money. But look at month 20. Look how it starts to accelerate from month 14 and 15. And you're doing the exact same thing. You're just aiming for 10% a week. You're literally doing about 80%. You're literally doubling your account every month by doing 10% a week. Now, everybody's trying to double their account in one trade, or in 1 week, or a couple days. Okay, if you try to double your account every month, or at least make 70 to 80% on your account in a month, that's be more realistic. Look at month 24. We've taken this amount. We've made that much just by doing 10%. But the reason why you want to start small is to get the discipline and the understanding of this process, to do it slowly. So rather learn how to do this with small money, and learn how to slowly increase your lot sizes and get familiar with what lot size you need. Use a lot size calculator for each month that you do hit your target. Then obviously you've got to start adjusting your lot size. I would recommend for every $100 you increase the rule of thumb is every $100 you increase your lot size by 0.01. Just rule of thumb, for every $100 increase it by 0.01. Yeah, guys, I hope that helped. And Hope you guys have a good trading week. Just please leave some comments below. Give this video a like if it helped you. Don't put yourself under pressure. Always understand compounding and time. Let's always focus on that, because that's what's going to save you in the long run. That's how hedge funds and banks do it. They don't rush and try to triple their accounts daily. They just have these targets. They might be aiming for less, 5% or whatever. But realistically, set a 10% target every week. And once you hit it, have the discipline to stop trading and wait for the next week, because there are only a few setups every week in the market. And at least with Divergence, it's showing us those setups. It's giving us clues as to when those setups are going to happen. Peace, guys. Have a good one.